we've got the opportunity today to talk to Mark about what's been going on in what's been a pretty tumultuous few months. It's been a rough ride in markets, certainly from where I've been sitting. The markets collapsed in March. The whole system came pretty close to collapse in March. And then the rebound since then has been almost as alarming on the other side. There seems to be this huge gap between what's going on in the economy and in corporate earnings and what's going on in markets, which are looking pretty positive. What's your assessment of how this disconnect has developed and where it goes from here?
Yeah, it's one of those things that's caught a lot of people by surprise. So a lot of luminary investors were quite definitive that it would be a very slow recovery in markets, and probably there'd be lurches further down in markets over this time period. So it's been surprising to many people. I think what's happened is a few things. One is just this huge wall of stimulus, so fiscal stimulus, monetary stimulus, which has come faster, harder, bigger than anybody had anticipated. Lots of lessons were learned from the global financial crisis, and it's particularly so in the US, which is arguably the most important capital market for the stimulus to happen. But it's been in many other markets that it's happened harder, faster, quicker. So that has produced a lot of a lot of liquidity and a lot of stimulus, that some of which has been recycled back into the markets as well. There's lots of anecdotal evidence of some of those stimulus checks getting brokerage accounts being opened and that money going back in. I think that may be happening on the margin. I don't know whether that's all of what's happening, but certainly there's been some unusual things happening in the market with bankrupt companies rallying to tremendous levels, bankrupt companies raising capital in the markets, which is unprecedented. So some very unusual things happening there. Having said all of that, I think there are signs that, as of today, again, that the economy is coming back maybe faster than some of the more pessimistic expectations. And employment's coming back faster, and consumption's coming back faster. So, it's possible that, it's not completely disconnected from markets. Maybe markets have, they're taking a more optimistic view, but maybe they'll be proved right here. I think it's difficult to tell at this stage.
Yeah, I mean, the job of markets is to get ahead of the news flow effectively. But do you feel like do you feel like the rally is rational, or do you feel like it's doomed to failure?
So let me give the caveat that I give on all of this, first of all, which is for CPPIB and what we do. This is the last thing we do. We don't market time. I can't tell you where the market's going to be in the next 3 months. It's not a skill that we have. We have a skill of picking the right stock over the wrong stock, the right building over the wrong building, the right fund over the wrong fund, and building a well-diversified portfolio that will perform no matter what happens from a macro point of view. So they're the skills that we have. So with that big caveat, I'll give you a personal view. I think it is. I think the things that need to happen for the markets to continue to be supported at this level is that the economy keeps coming back in more of a V than this sort of slow sort of swoop. And I think from our economic perspective, we're still predicting the sort of slow swoop, and we don't get back to the same level of economic output that we had pre-COVID until second half of 2022. Right. So you have a slow recovery, impeded by social distancing and and second waves and third waves and things that are just going to keep a dampener on it coming back straight to a V. But there are the markets could be lucky. Things could happen faster than anticipated. Maybe markets will be maybe right on vaccines coming sooner than anybody could possibly have expected. I mean, there's still some vaccines that look pretty promising. There's over 100 vaccines being developed. There's the Moderna vaccine. The CEO on this morning again saying promising results imminent, and possible production and by fourth quarter. Same with the Oxford vaccine with AstraZeneca. hopefully they'll have a signal by the end of the summer, and possible, they can get into production in fourth quarter. So, if that happens, then, markets may well be right.
But during this whole process, the debate about sustainable investing has taken a bit of a back seat. It's kind of been crowded out of the news flow, really. Certainly I haven't been as receptive to press releases about sustainable investing during March as I was focused on everything else. But what's your assessment of whether sustainable investment has worked through this process, and whether you do get better outcomes from using that kind of focus?
Yeah, I think it's always, the easy answer is always too early to tell.
Yeah.
But I mean, I think from what we've seen is reasonably encouraging that, we certainly, a lot of this plays out in the long term. We believe there are strong correlations between these indicators of environmental, social, and governance behaviors and long-term performance. But you can't just you can't simplistically just look at an index and say with one score that's the case. Or you can look at, a company that may be fantastic in its environmental protections but terrible on governance, and you've got to weigh what's important. Or it could be it could be something, it could be a company that doesn't really make much environmental impact but is wonderful on its environmental scores, but governance is really important to it. It's terrible on its governance scores. So it depends on what's important. But having said that, I mean, to us, certainly our sustainable investing portfolios and ESG indicators have performed reasonably well through this period. Actually, I mean, I think the companies that, and maybe, we don't know what's cause and effect, but it could be companies that care about this stuff generally have better planning, generally have better risk management, and generally probably were able to, to weather the storm more than companies that are, are more just, planning for the next minute and reactive, and therefore we're less prepared coming through this. So we've actually we have seen outperformance by companies that do care about ESG, certainly in that down market. So everything's come back, snap back, then it's more difficult to differentiate.
And given that, does that lead you to increase your focus on it? And do you think the industry as a whole will increase its focus on ESG investing, or do you think some of that will go by the wayside in the industry more broadly while people just focus on getting through the next few months?
No, I'm quite optimistic, actually. The investment industry is really moving in this direction. I mean, we've been focused on it, I think, for 12 years now. 12 years ago, we issued our first sustainable investing report. And we've been, and it was, we had climate change as one of the key things we were focused on back then. And we've broadened our focus over the years. And so I think what I see is, a lot of momentum in the investment industry to really care about this stuff. I think people are wrestling with what's the best way for companies to report this. I think companies are frustrated by just so many different ways of reporting the information. Investors are frustrated by so many different ways of reporting information. We'd love to have one system. There's been progress made, for example, on climate change information with the move for the Task Force on Climate-Related Disclosure, the TCFD, TCFD disclosure standards, which have become a standard, and now many companies are adopting it. And that's helpful. Once you have standards that companies then don't have to keep, responding to 1,000 different requests, and investors can take one set of numbers and then process them and then figure out the risks in their portfolio, then that really helps. So there's lots of efforts to try and consolidate the different ways of ESG reporting, and I think they're moving along, and that will really help further adoption.
So thinking back to pre-COVID and post-COVID, they're two very different worlds. What has changed in terms of investment strategy as a result of the crisis? I know people are looking at things like does the government bond market provide the ballast that we thought it did? Does cross-border investment work like we thought it did? Do we have to think differently about supply chains and about where companies place their manufacturing? What are the big themes that for you have changed since February?
Yeah, it's funny you mentioned the government bond diversification impact. I'm about to go into our investment committee to talk actually on that topic. The spoiler alert is we think that it continues to be an important diversifier. So they certainly did their job for us during that big downturn. So, I mean, it wasn't the only reason our first quarter, so our first calendar quarter, and which is the last quarter of our fiscal year, we were only down 3.7% despite all that turmoil in that quarter, and we were up fiscal year. We were up over 3% for the fiscal year. But it did really help. I mean, it created a real dampening effect. Bonds rallied very significantly as equities were selling off. Even though some of these are trading with negative yields, so it still does seem to be providing that diversification.
There was just that scary moment. I remember it so well when the bond market started selling off in line with everything else, and it was like.
There were some heart-stopping moments. The heart-stopping moments, generally it works. But yeah, that's a fundamental issue. If you believe there's going to be a breakdown of that inverse correlation, then that has enormous implications. So I'd say that's a spoiler alert from our point of view. It's not consistent. There's a wide range of views in the industry on this. There's people looking at gold. There's people looking at other ways of diversifying your portfolio. But it's a fundamental issue. So that's like the big picture for the portfolio. Yeah. I think thematically, we're looking at changes to consumer behavior that may come about. So there's been a big move to anything on like the full digital experience. Certainly for older generations who were reluctant adopters, they've been forced to become adopters of things like home banking and home fintech and. Right. And they're unlikely to go back once they find they figured out how to use it. Ordering groceries, people ordering groceries. The main frustration is the amount of capacity in the system there, and so people. There's been huge growth, but it's been impeded by capacity. Things like online education is interesting in that the West and the East seem to have very different experiences. So when we do our survey, we find people in India and China really have enjoyed the online education experience, whereas in Europe and North America, people have really hated it. And we're trying to figure out why, but it seems there's more specialized education technology in the East, and it was more tailored to the online experience, where I think people in the West have experienced their traditional, just their classroom teacher trying to do a class online, and that's been much less engaging and interesting to people. We're speculating on that front. So we're looking at those things. Healthcare, obviously, there's been a big move online. People have really adopted telemedicine, huge move to that, again in the East, but also in the West, and I think people really enjoyed it and probably will keep with it.
And what about global growth? Where will it come from in the world? Does it tilt your geographical balance at all?
I mean, it's difficult to tell in the longer term whether there's there are more profound shifts. I'm not sure there's profound shifts. I mean, I do think I was going to say supply chain complexity is going to increase as people want to re-onshore supply chains for security reasons and other things. So I think the reverse of globalization, I'm afraid, is probably going to continue for a while as people demand more of their key industries to be closer to home and need to pay for it. So because they're going to have to pay higher prices and pay for more complexity in supply chains. So that feed through to costs, and we may have some changes to cities and infrastructure. I mean, unclear yet really what happens with office buildings. I mean, I think maybe a longer term more flexibility, certainly for knowledge industries, for people to work from remote, work from distance, and no need to do the commute or no need to actually be in that city center. But but in the shorter term, you got a need for bigger footplates so you can socially distance people as well. So not entirely clear what happens there. And I think ultimately those trends of the fact we're all, we won't change as a species. We're a social animal. We want to be together. We want to go to noisy restaurants. We want to go to the noisy. We want to go to the movie theater and sit with a bunch of people. We're not going to talk but to share an experience. I think those trends. So my suspicion is office continues because people want to be part there and physically with each other and part of teams. So I'm less pessimistic than others on that front.
We are rapidly running out of time, but in a nutshell, what would you say is the main thing you've learned through this process, both in terms of leadership of an organization and in terms of investment?
I'd say two things. One is I'm really thankful for the preparation that we've done, and I think that's always key. Having thought through these crises, the fact we had put in place really strong risk management systems, the fact we had financial crisis management protocols in place ahead of time, the fact we had robust private valuation processes in place ahead of time, the fact we had data feeds, so we could get really excellent data on how the fund was doing every single day, and all these that sort of preparation work, plus many other things, really was critical. Because if we'd been scrambling around trying to do that in the midst of the crisis, it would have been a mess. And then the second thing, I think we, like many other similar organizations, have been pleasantly surprised by how well the distributed experiences worked. It's not, I appreciate a number of people have a challenge, particularly when they're juggling lots of commitments and families and young kids they're trying to look after. But generally, the organization works incredibly smoothly from a distributed, going from, 9 offices to 1,800 offices overnight. It's amazingly well.
Yeah, we never thought it was possible to put out the FT from home, but it turns out you can do it.
Yeah.
Where there's a will, there's a way. Mark, we could chat all day, but we're not allowed to. We're going to have to leave it there. Thanks so much for sharing your thoughts.
Great. Thanks, Katie.